Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen a breakdown below the 39.40 to 50 area, which was yesterday's bias confirming zone, and a break and hold below that zone served as a bearish confirmation. And now heading into the open, the main question is whether this overnight breakdown attempt is going to succeed and result in follow through, or will it become a false or failed breakdown attempt, and how the market behaves at the 39.43 to 53 intraday bull bear is going to help answer that question. As long as sellers are holding ES below 39.43 to 53, our short-term bias will be bearish, and even our intermediate will be neutral bearish, and holding below that area can result in downside continuation. So how the day shapes up is really going to hinge on how ES behaves at the 39.43 to 53 area, and below it we would have a certain degree of bearish time frame alignment, which can result in downside continuation. Now, in order for the market to continue selling off, we will need to see signs of initiative selling in real time. So we will need to see continued broad market weakness and sustained downside momentum. And simply a lack of downside momentum at the lower prices can attract responsive buyers. So today could end up being a pivotal day for buyers and sellers, and for that reason we need to remain relatively flexible. Now, below the intraday bull bear, our focus should be on the short side, and we do need to exercise caution on any long setups. But in the event that we get a breakout above the intraday bull bear, that would be an early indication of a false or failed breakdown attempt, and that is a bullish pattern, and that can then take the market back up into the 39.65 half to 76 half initial resistance, where sellers may still be active on first test given the overnight bearishness. And if we break out above initial resistance, then that would confirm the false or failed breakdown pattern, which again is a bullish pattern, and a breakout above initial resistance would be an intraday bullish indication, which can then bring the 39.89 to 91, as well as the 39.97 to 4007 area into play, where sellers are likely to be active on first test, and we would need to see broad market strength and sustained upside momentum, as well as above average volume to move beyond 39.97 to 4007 on the day time frame. If those conditions are present and we break out above 39.97 to 4007, that would serve as an intraday bullish confirmation, and that can then open the door for a test of 40.1175 to 1575 and 40.23 to 34, which has potential to cap the upside on the day. Now, again, in order for the day to turn bullish, we would first have to take out the intraday bull bear. As long as sellers are holding ES below 39.43 to 53, our bias will be clearly bearish, and if we break out above the intraday bull bear, that is the only time where the bias could shift on the day time frame, and the resistance areas above could come into play. And in order for the day to really turn bullish, we would at least have to take out the initial resistance zone. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the 39.43 to 53 intraday bull bear. That's going to help set the bias and tone on the day, and we'll take it from there.